Today we'll be talking about the 80-20 principle, but specifically for traders. How does that work out? We're going to try to reduce your workload and get you better results with this 80-20 principle. Let's dive right in. Actually, the 80-20 principle was a rule that was created back in the 20th century, so a long time ago in Italy. Now, there's been many versions of it. People have been writing books about it many times in the past, but I want to show you how it applies to trading, how you can make it work, and how you can use that principle to get better results without putting much work and a lot of chart time in trading. All right, so the basic sense of this principle is that 20% of your work brings 80% of your results. Okay, so we could put it the same way in the market. 20% of your trades, okay, give you 80% of your profit. Now, this also means that the inverse would be true. 20% of your trade will give you 80%, if you're not profitable yet, of your losses. Okay, so if you can cut that 20% here of your losses, then you'll get better results. Now, let's just say, for example, you place 100 trades a week. So every single week, you go in the market, place a lot of trades, and these trades might not always work out. Maybe you have a lot of them that are break even, a lot of them don't get any results, a lot of them are losing, but only a small portion of these trades will actually give you good results in the market. And what we want to do, of course, is eliminate some of them, cut out these trades that don't give you any results, to only keep the good ones, the ones that will give you good results. Now, I know this is only theory, so I'll get back at the end, give you some exercise, things you can actually work on, you can implement. But let's say we're going to reframe this a different way, right? I've said before, 80% of your trades gives you only 20% of your results. So let's say your goal is to keep it simple, 50% return per year with trading, right? Out of those, if you look at 80% of this target, that would mean that 40% of those return is based out of only, let's say if you take 100 trade, 20 trades, 20% of your trades. And then that only 10% that you have in your return is going to be based on the other 80% of your trades. Now, would you be willing to cut off that 10%, have a lot less trades, be in front of your charts a lot less, to get that 40% compared to that 50%? Would that be a proper trade-off? For most people, that is. And you'll see this principle applies to trading so well because only very few of your trades will actually be good hit runs and will actually go far in the market. Most of them are going to be break-even or small wins, 1R, maybe 1.5R. And a few of them, very few of them, will get actually good results. A few of them will be trades that you can keep for the long run, trades that will go very, very far, do 3-4R, and most of them just won't do that. So you can basically find which environment your trades perform best in and which environment they perform the least well in. You can figure this out. You can look at the market, evaluate the circumstances around them, evaluate how the trade unfold, to then be able to take off that 80% of trades that gives you only 10% a year. If you can take these off, you have a lot less workload on your plate. And that's a good thing. Now, what else can you do about this? Well, if you find environments where your trades perform the best, environments where they perform the least well, you can cut these out. You can also think about what kind of strategy I'm the best at. I know people sometimes say, oh, you gotta have multiple strategies, you gotta diversify your risk, you cannot just trade one thing because it's too risky. But what if these other strategies you have strategy number 1, number 2, number 3, maybe number 4. What if these strategies are just kind of crap? They give you only a small percent a year. Only 10% of your returns every year out of the 50%. Could you be willing to cut these out, focus only on one strategy, and get better results? Well, that could be the case. I'm not saying that's what I do myself necessarily. That's for sure not what I do. I have other strategies that also give me decent results. But I definitely see that some strategies I trade might only give me like a 5% return a year. Or some pairs I trade. Pairs the same principle. Pairs I trade might give me only 2% per year. These obscure pairs, sometimes even like the popular pairs that I still trade these days because they're like the very popular pairs, but they don't have good results. Would I be willing to cut these out to lose 2% a year? Maybe overall I lose 10% a year, but I cut like 10 pairs I'm looking at. Would that be a good trade-off? That for sure would be a good trade-off, right? You spend a lot less time trading, but you get better results. And eventually, if you just increase that risk a little bit on that 40% you make, so instead of like risking 1% of your account per trade, you do go to 1.5%. And that 40% here might be going to 60% instead by increasing the risk a little bit on these things that work better for your account. And then you've cut out all this stuff over here, all crap that didn't give you any results, and your results end up being better overall. Would that be a right trade-off? Now we've talked about the whole principle of the actual trades, but let's talk about what happens if you're a losing trader. It's going to be a good plan for losing traders. We know for a fact that 20% of your trades or the mistakes you make account for 80% of your losses. And of course, that numbers might not be exactly like 20, 80. These numbers could vary. The principle is the fact that the majority of your losses will be caused by only a few things you do in the market, only a few trades you take. Like think about that big trade you take, that one big trade where you actually put in a lot of risk, and that loses you like maybe 10, let's say 10% of your account, minus 10%. That's one trade out of maybe 20 trades, but it's causing you a big loss. Again, you can figure out which things are losing me money, which things I do in the market that make me lose more, which things I do, which pairs I trade, which strategies I trade, which mindset do I have that makes me lose money. These things are all things that apply for both losing traders and good traders too, because you can always optimize your performance, optimize the way you do things, and that's exactly what we talk about here. How can we cut out stuff that gives you the worst results and only keep the stuff that gives you good results? Any losing trader could get profitable if they are willing to cut out the 20% that causes them to have 80% of bad results. Okay, if they can do this, then they will get good results, because the other 80% of what they do on a daily basis is actually giving them good results. Okay, and it's actually giving them a good equity curve in the market. But this is the part that they have to cut out. Now, anyone can do this. Anyone who takes the time to sit down on their chart, look at all the past trades, look at what they do, what's the 20% giving them the 80% of trouble, anyone can do it. It doesn't take like a clever person, someone who's like really instructed, or someone who took a course, who learned like smart money concept or whatever. It doesn't take anyone like that. Anyone could do it. Now, the other thing I wanted you to do with that principle, which is a very big key, is you list all the things you do regarding trading. Now, that could look like while you place trades. Sure, you've got to place trades. We cannot really get away from this. Okay, fine. You watch YouTube videos. Okay, you research strategies. You backtest. There's going to be a ton of them. What else can you do in the market? What else are some things that you do for trading? You go to events. Putting anything here that could make sense. You maybe read books. All right. Okay. Let's say you take courses. All right. These are all like education. You could output them together if you want. Okay, now we have a few of them, but you might have more than this. You're sure gonna have more. And this is where the fun part begins. What are these things here? What's the 80-20? Right? What's the 80% of things that give you only 20% of your results? Do that here. What are the activities you do that produce barely any result? Like a small fraction of results compared to things you do that produce good results. I will guess for most people, backtesting is actually a good one. It's gonna be 20% of things that produce 80% of the results. Watching YouTube videos, it depends. If you are trying to search strategies, that might not be part of the 20% of the things that give you 80% of your results. That could be actually part of the 80 that gives you 20% of your results, which is not much. Like you can go online, research strategies, you can read books about technical analysis all day if you want. Your results won't get better. You'll still have the same bad results at the end of the day. You won't really get better from learning from books or learning more stuff necessarily. Like knowledge and trading, this is good to remember. Knowledge or more knowledge does not mean more results. It's actually the opposite. The more you know, sometimes the more you second guess yourself. So the less you know, sometimes you can get good results. What about journaling? Could that be part of the 20% that gives 80% of the good results? Sure, that could be. That could be a good one. Self-analysis, which means looking back at your trades, looking back at things you did, looking back at your patterns or triggers in the market. Very good one, right? Read books, well, that could be part of the 80. Take courses, it depends. Go to events, that could be a waste of your time. Placing trades, that could be, of course, something you do. But if you do it with the wrong mindset, that could be part of course, not good results. Now, there's a lot more things you do here that you could write down. And then you want to do this exercise again to figure out what are things you do that gives you no results. Most of the things give no result are just plain waste of time. And what are some things, a few things you do that give you good results in the market or that help you to move forward, help you proceed. Okay, you can do this with anything in life and with anything you do, with trading especially, because that's super important. It's a tool for looking back at what you do, looking back at your results. How can you get better results? And traders that I've known who do this get ahead much faster than the other ones. Okay, I've done this people in the past. They use it really well. They love it. It's a good tool. And I recommend you do the same thing as well. Let me know in the comment section below if you like that video. If you like this topic on the 80-20 principle, I want to hear your thoughts. I want to hear what you think. Let me know in the comment section below. Don't forget to subscribe if it's not done yet. I publish videos like this 3 times a week 2 videos in a week, one interview every Sunday to teach you stuff about trading, tips, advice, knowledge from people who are in the industry for a long time and can help you get ahead. And I'll catch you back here again in the next video pretty soon. Ciao.